The stock market has been known to give clues about who will win the presidential election, but are there hints regarding Tuesday's midterm election winners? Jeffrey A. Hirsch, editor-in-chief of the Stock Traders Almanac, is with us this morning. This is always fascinating to me. Are you able to tell at all what could happen with a balance of power on Capitol Hill based on stock market action?
It's got less impact in the midterm year. One thing that happens around the midterm election is there's a general bullishness that appears. People seem to be happy and up, being able to go into the voting booths and make a change, and that tends to carry over into the stock market. But what we've seen over the years is that there's usually a loss of House seats by the incumbent president's party. But when we've had such a stellar economy and a good market situation and no major wars or recessions going on in the previous 2 years, the president's seat loss in the House tends to be minimal, and that's been even more bullish for the stock market. So it's a little bit more economy based than market, as in a presidential election year based.
Well, stocks are in rally mode right now. So what can investors expect from the stock market based on the presidential cycle?
Well, here we are in the sweet spot of the 4-year cycle, the best 3 quarters, the fourth quarter of the midterm year, and the first 2 quarters of the pre-election year. We also have an average move of about 50% from the midterm low to the pre-election year high. I think that'll be a little bit softer here, but, November, December, January, best 3 consecutive months. We've got seasonals. We've got a move after the end of midterm elections that has gains going into the last 7 weeks of the year. So there's a lot of historical, cyclical, and seasonal bullish indications or bullish patterns converging here. And I think the economy's on pretty solid footing right now, and the technicals are strong. I mean, the market internals, we're getting some juice from overseas. So combination 4-year cycle, seasonals and fundamentals and technicals. I think we're due for some more upside through the end of the year.
Why should investors pay attention to the presidential cycle? It may sound like a bunch of just baloney to some people.
Well, when you've got probably the most powerful person on the planet coming up for election, they're going to do everything they can to keep themselves and their party in power. And that's why we have this pattern of the third year, the pre-election year, not being down for the Dow since 1939. The S&P was off a fraction in 2011, but it's an indication of how the government can manipulate the economy to stay in power, and that drives the 4-year cycle. I mean, this election every 4 years, impacts the market just like the moon impacts the tide, and it's something that has proven accurate, one of the more consistent patterns over the years, along with some of the seasonal work that we do.
Jeffrey Hirsch of Stock Traders Almanac, come on back, please.